let's talk Tesla. Is it stock running on, actual high-octane rocket fuel, or is it maybe just premium-grade hype? We see these glowing headlines, right?
Yeah.
But then the valuation models seem to be screaming something else entirely. So today, we're going to do a deep dive, cut through some of that noise, and figure out, well, does this rally actually have legs, or is it about to run out of juice? Welcome to De-Risk, a podcast where we provide a no-nonsense analysis of stocks. Working with data before market open on August 27, 2025, I'm your AI co-host, ready to de-risk your trading day. We'll be using our research today to really unpack Tesla's current market position. Let's process this.
All right, before we jump straight into Tesla, let's quickly check the broader market mood. This morning, pre-market futures are suggesting, well, slightly lower open, so there's some caution out there. And what's really catching my eye is this new Moody's report. It's warning that a huge chunk of the U.S. economy, I think powerhouses like California and New York, they're either in recession or really close to it.
Right, and that matters for Tesla because...
Yeah. Well, even for a company like Tesla, selling high-ticket items, that kind of broad economic chill could be a real headwind. Doesn't matter how good their own news is, necessarily. Oh, well, we've also got a speech from the Fed's Williams later today. That could definitely stir things up a bit.
Yeah, good point. That macro context is really crucial, isn't it? Sometimes Tesla feels like it's in its own universe, but these big factors must play a role.
Exactly. No company's completely immune. Now, talking about Tesla specifically, operationally, things do look impressive, no doubt about it. You've got the robotaxi service expanding in Austin. They're hitting production milestones over in Berlin.
And the Cybertruck launch in South Korea coming up too, right?
Precisely. So it's this flurry of positive headlines, paints a picture of, innovation, global reach. And this is where our research shows a real contradiction when you look at Wall Street's view.
Okay, so what's the contradiction? Tell us more.
The analyst consensus is actually just a hold rating.
Yeah.
And we've seen caution increasing over the last few months.
So the analysts aren't quite buying into the hype then?
Not fully, it seems. And the core issue, the real conflict, is valuation. Our research, looking at cash flow, earnings potential, it puts intrinsic worth somewhere between, say, $44 and $132 per share.
44 to 132.
Okay.
And where is it trading now?
Over $350.
Wow. Okay, that's not just a gap. That's a canyon, like you said.
Exactly. So that's the dilemma for traders, for investors. Are you trading the exciting story, or are you trading the, well, kind of terrifying math?
Compelling story versus terrifying math. That really sums it up. So what's the crowd doing? What's the market pulse telling us?
Well, looking at the options market from our data, there's definitely a bullish lean. The put-to-call ratio is 0.57, which means basically almost 2 bullish bets for every 1 bearish bet. People are betting on it going up. And that $360 call strike, that seems to be a key level traders are watching closely.
Bullish sentiment there. And what about short sellers? Are people betting heavily against it? Not really, actually. Short interest is pretty modest, about 2.73% of the float. So the risk of a big short squeeze seems kind of low right now. The market seems to be leaning towards the story. Cautiously optimistic, maybe?
Yeah, the immediate sentiment seems bullish.
Yeah.
But let's layer on the technical picture, the charts. And this is where it gets fascinating. The short-term strength is just undeniable.
Okay.
The trend, powerfully bullish. It keeps making higher highs. Volume, unequivocally positive. We're seeing strong accumulation, money flowing in with conviction.
And momentum.
Firmly bullish, gaining steam, actually, accelerating upward.
So short-term, everything's green.
Pretty much. Yeah. But here's the interesting split.
Mm-hmm.
All that short-term strength is happening while our long-term indicators, the ones we've tracked for months, are still flashing a bearish signal, a warning sign from way back.
Right, that conflict again.
Yeah. And one more thing. Despite these big price jumps recently, volatility has been surprisingly stable. It hasn't gotten wild, which might suggest this isn't just pure speculation, maybe more controlled buying.
Okay, so dynamic tension is the theme here. Powerful short-term technicals clashing head-on with those persistent long-term valuation worries. Given that stark contrast, how do we actually approach trading Tesla today? What's the playbook?
All right, so for today's session specifically, look, despite that massive red flag on the long-term valuation, my analysis points towards a bullish outlook for today.
Bullish, okay, why?
Because the short-term technical picture trend, volume, momentum, they are just so strongly aligned right now. It's creating a powerful tailwind, Capital is decisively flowing into Tesla right now, even if the broader market is hesitating. You trade what you see in the immediate term sometimes.
Got it. So for you listening, here's today's action plan based on that. Keep an eye on a key resistance zone that's roughly between $360, which is where those options traders are betting, and the after-hours high around $372. A competent break above $372 could signal, another leg higher.
Key upside level.
On the downside, watch the pre-market low around $351. That's your first support level, your first line of defense. If that gives way, then yesterday's low around $344 becomes really critical. If it drops below $344, well, that pretty much invalidates today's bullish idea.
Exactly. Those are the lines in the sand for today.
So there you have it. Tesla. It's really a trader's paradise right now, built on that momentum, isn't it? But it's also an investor's puzzle because of that valuation. The short-term chart says go, but the long-term math is saying whoa. So trade the momentum if you're trading, but definitely keep one hand on the emergency brake, right? Have that clear exit strategy. And maybe it's something for you to think about. In a market that seems driven by both hard data and compelling stories, which force ultimately wins out? Is the cold logic of value or the undeniable power of a narrative that just captures everyone's imagination? Food for thought. That's all for this episode. Remember, this podcast is for informational purposes only and isn't financial advice. Always do your own research or consult with a qualified financial advisor before making any investment decisions. Thanks for tuning in, and we'll catch you on the next episode of De-Risk.